So my talk today is really about how to be a global investor. But since this is a startup oriented story, perhaps I could give you a little bit more than what the introduction has given us. So after college, I graduated from College of St. Benilde. I started my own business. During college, I was a working student. I was a systems analyst for a Dutch company, and I mainly designed parking systems in the Netherlands. Whatever I write, the software engineers would follow. And as a student, I was lucky enough to earn probably 8,000 pesos per week from the Dutch company, which is during 2012, which is pretty good deal for a working student. Moving forward, when I started my first business, it didn't really go well. I even had some side hustles. I had license to sell some beer. I distributed in northern Mindanao. I wasn't able to collect my receivables. I did a lot of failures, just like the others did. Eventually, while my software company in 2015 to 2019 was slowly failing, I also invested and advised in another company, a local company called Full Suite. I was their CTO, and out of nowhere, the president of that company decided to sell the company, and that was the very first exit that I had. The buyers were from Singapore, and that was my very first local, acquisition. And ever since then, I've been wanting to have an experience of probably one day I could exit as well as an IPO. It's not yet there, but it's coming. And during 2019 and 2020, I was also advising at the same time working for a startup. It's a game studio in California. And eventually the CEO decided to buy me out. And that was my second exit. And fortunately, a month before or a month after the exit, I had enough money to brace for the pandemic because the pandemic started in March 2020 or in April. So the timing was a bit good. And eventually, I was invited by an American investment bank to help them out in a lot of needs from marketing all the way to gathering data and other odd jobs that you probably would not think of, like interviewing potential software engineers in their company. So, why am I passionate to talk about how to be a global investor? Well, for one of the biggest learnings that I've had as a young entrepreneur is that don't put all your eggs in one basket, which means always have a plan B because you don't know when your startup would crash and burn right away. So you gotta pick up yourself, not just move on, but move forward. But at the same time, have something a little for yourself. And that's why being a global investor is probably the easiest way to secure yourself because you could liquidate your assets in the future or even have something to pick up. But speaking of assets, maybe let's talk about what are assets. So, as Google would say, it is useful or valuable. An asset could be a real estate, shares of a company, cryptocurrencies, limited edition collectibles. If you're an anime fan, you probably have boxes of those, or any fan at all, like Pokemon or I don't know, Marvel, things like those. You got to have your insurance. I'm sure you have friends who suddenly became financial advisors. They do have insurance. Talk to them. They could save your life eventually if you get into some medical troubles. Uh, of course, cash is king. Their artworks, their NFTs or non fungible tokens, and the list goes on. And there's so many different types of assets. But you just have to remember it must be useful or valuable in your life. So, what are the popular investment options of digital natives? I chose digital natives. I'm not going to say millennials, but digital natives, everyone. This already includes Gen Zs because the generation before millennials, they're the digital adopters, while millennials, they really, woke up and they have digital devices all around them. While Gen Zs, they're like the internet natives and all these things. So we do have real estate as popular investment option, and as a lot of people would say, the safest, even though they've experienced a real estate crash in 2007 to 2009, if I'm not mistaken, of the years. We have shares of companies, and there are two types of shares. There are public companies where you buy like Shakey's, Jollibee, or Microsoft, the popular brands that we know as Filipinos. Uh, Cryptocurrencies are also very accessible to everyone nowadays. NFTs and insurance, because we always have that one friend, or there's always that one person selling us insurance for some reason. So why are these popular? They're popular because they are accessible. So how are these assets accessible compared to the other assets back in the day? Well, for starters, everything has an app nowadays. If you have real estate, you want to buy, you want to sell real estate, you could check out Quarta, or if I'm pronouncing it correctly, it's weird to say Kvarta, but I think it's really Quarta, where if you enlist your condo, for an instance, they'll give you a an upfront payment of, let's say, 50,000 pesos, and you'll give them exclusive rights to sell your condo within 6 months, and they can do it because they have the expertise to do it. Or if you want to buy a condo with a very good price and reasonable rates, you could also check them out. If you want to buy global stocks, originally, let's say public stocks in the US or in Japan or in Germany, you could open an account in GoTrade. Initially, GoTrade was only invite only. So a friend needs to give you a code to get into it. But nowadays, you could pretty much download the app, go through the KYC or know your customer, and be able to perform the the purchase, the buying and selling of public shares. What's cool about GoTrade is they do fractionalized shares, which means you don't need to buy a $3,000 worth of Google stock, and that's just one stock or one share. You could just buy a fraction of the share, which is you could put there $5, $20, you name it. It could be in smaller pieces, and you still have the benefit of it as whatever the property of the public share is. Binance is a cryptocurrency platform. As we know, you buy and sell crypto in there. OpenSea, you buy and sell NFTs or non-fungible tokens. We know Gcash and, well, now it's called Maya. It used to be called PayMaya, which all of these apps, they constantly evolve. Let's say, for example, Gcash, it started only with a wallet. Eventually, it added investment options like some sort of mutual funds or index. And then out of nowhere, their competitor PayMaya is now also doing crypto. Same with CoinsPH. They started with crypto, and now they're doing bills payment in any biller that you have in the Philippines. So all of these apps, they keep evolving, and they all fall under fintech. So if there are apps, there are also service providers. They don't necessarily have an app, but they still make it easy for you to acquire these kinds of assets. For an instance, a very popular group here in the Philippines or even in the United States called Remax. It's a franchise where you could buy or sell real estate. You talk to the old school way. You sit down with a broker. You talk to them what you want, your needs. They figure it out. Are you selling? Are you buying? And then you could close a deal with them. If you want to liquidate your cryptocurrency or acquire cryptocurrency using your peso, you could go to MoneyBees. And by the way, all of these, they're all licensed here in the Philippines. So I consult with MoneyBees, and they're one of the few companies licensed by the central bank or BSP to buy and sell crypto. And they also provide a concierge experience where if you're introduced to them, you will have a dedicated chat like a telegram, and you could now ask for what's the exchange rate right now of crypto to fiat, Bitcoin to peso, Ethereum to peso, etc. Switch, flip, whatever. And you could do your transactions there. You could pay online, you could pay over the counter. There are a lot of payment options right there. And our own new product, and hopefully we will incorporate it as a separate company called C Funders. It's an investment magazine where it lists all the regulation A plus companies in the US. Just to give you an idea, an A plus company is allowed by the American SEC to fundraise up to $75 million dollars a year, but they are not a publicly traded company. They're a private company, but authorized by the SEC to do crowdfunding. There's another regulation called CF. If they're under CF or crowdfunding, regulation crowdfunding, it allows you to fundraise up to $5 million dollars a year. Either way, to become an official investor of those, you need to at least do 7 pages of paperwork and be able to become a legitimate investor in the eyes of the SEC. So, what do I mean by legitimate investor? Well, there are times where, in my investor relations management consulting with companies in the US, there are times where a person would pay using their credit card. It was their credit card's already been deducted, but they're not yet recognized by the SEC because they didn't complete the paperwork. For instance, they forgot to submit their proof of billing. They forgot to give their social security number. And if you're missing a requirement, you're not going to be an investor of that company in the eyes of the SEC. And that's why we have investor relations managers to keep constantly reminding or make sure that everything is going well, that the investor is really going to be a legitimate investor. They follow up whatever they can, they do their best to make them a legitimate investor. And if they have concerns about the company, they could also contact the investor relations manager because that's their job, to have a relationship with the investor, with the SEC, and the investment banks, and of course, the company or the issuer. So, popular investment options, I rank them from risky to the riskiest. So, you're aware, since if you're in business, you got to know that there are risks involved in it. If there are no risks, then you're not in a real business. So, throughout time, a lot of people have accepted that real estate is a low risk kind of investment, and it also appreciates value every year. In the Philippines, the average annual appreciation is 15 to 20%. Even though we've experienced a pandemic, it's still going in that direction. The next one would be an insurance, because if you meet the conditions of the insurance, depending on your policy, you could still use it. You get into an accident, you get into a medical situation, you could tap into the insurance and you would get all the benefits right off the bat. Next would be the public shares. You don't really know when the stock price of Tesla would go up and down, but since it's already regulated by the SEC in the US, it means they hit certain standards that would make them an investable company, and that would also include revenue and the liquidity of the company. And then next would be the private shares, where the regulation A plus and CF that I mentioned earlier, the SEC also has some set of rules that determines that, okay, these guys, they can crowdfund. They are legitimate. They're not a scam. It's not one of those crowdfunding platforms where you amazing idea, you put money on it, the next day they run away with the money and they just vanish like the avatar, right? When the world needed them most, they're gone. So um, with the Jobs Act of 2012 signed by President Obama, they they regulated the regulation A plus and CF, and that's why the SEC has it. So the Jobs Act was really meant to create more jobs in the US, and one way to do this is make investments and allow companies to be able to fundraise themselves or make themselves uh, grow with certain with unique financial methods. And one of the growing popularity back then was the crowdfunding, and so that's why they had to regulate it to protect the public, which I think they did a very good job. Starting on Jobs Act 2012, because they really created a lot of jobs from it. I would say non-fungible tokens are also risky. You don't know if you bought an ape that would make you the likes of Gary V or Snoop Dogg or Lady Gaga. You'll be in the same club with them, or you're just randomly buying a random NFT that nobody ever heard of, and you think it's cool, but there's not really a lot of value to be offered in there. And of course, the infamous cryptocurrency. If your salary is based on cryptocurrency, we don't know if you're really earning $100,000 or $1 per year. It really depends. If the prices goes up and down, that market is really volatile. Invest at your own risk for sure. And yeah, I'd like to focus more on my next couple of slides on the private shares. So the private shares, they're high risk, but also high reward. So ask yourself, is it risky for me? Can I take the hit? Can I take the loss? And usually, great entrepreneurs, even Mark Zuckerberg said this one time, the riskiest thing that you'll ever do in your life is not taking a risk. So you'd probably already know these companies, Google, Microsoft, Airbnb, and Facebook. But the real question is, not everyone not everyone has the opportunity to be able to invest in these companies in the early stages. So think about if you're an early investor of Google, Facebook, they're only offered to Ivy League people, and usually only less than 1% of the US population could get into Ivy League schools. And these big deals are happening in these Ivy Leagues because they presume the smartest people of the planet goes there and they have great ideas and businesses that they would create. So that cuts off the rest of the world because these guys already have first dibs in investing. But it doesn't have to be this way. With the advent of the internet and the Jobs Act of 2012, Regulation A plus and CF is there so that early days of amazing companies of the future, everyone now has access, not just the Americans, but also foreigners, which includes us Filipinos, and we'll be able to access these kinds of companies. You could just check them on the SEC website, check Regulation A plus companies and CF, and you could directly put your money in there. You contact them, you put your money in there, you do the paperwork, and you become an investor. There are two types of investors in the US. One is called accredited investor, which means you have at least $200,000 worth of investments or portfolio. That's why you're accredited. You somehow know what you're doing. And there are also those that are called retail investors. These are the average Joes that probably works in a McDonald's with a 9 to 5 job, but they have extra money to invest. And so they invest it, but they don't know really the fundamentals, but they just like the company. They feel putting money in it. Those are the retail investors. They have less than $200,000 portfolio. Yeah, it's just fun fact. So this is one of the A plus companies that I'm really interested in. They're called Mizo Robotics. You could check them in the SEC in the US. Question: Can you guys hear the sound of the video when I was playing it?
Yes, yes, po.
Okay, I'll play this. So imagine a company, they already closed a deal with White Castle. They have robotic arms, flipping burgers, flipping fries, doing all the restaurant operations or fast food operations to save costs and make better use of human resources into something more creative or more content or design centered jobs. So we're in a future where we can't really compete with the robots or with AI or with technology in certain tasks, but when it comes to creating new value, that's what humans are good at. And this company, I think their minimum investment is $1,000 to earn to own one share of this company. And what's really unique about them is um, they're making restaurants more efficient and making it safer for humans because now they don't have to have accidents, cuts, or burns from the kitchen, which is normal in those industries. And these are some of their clients, I presume. Yeah. So that's Mizo Robotics. It's one of the it's quite a pricey for Filipinos to get into $1,000 investment right off the bat. But if I'm gonna put my money into something, I would put money on the robots because they're really very good in terms of optimizing businesses and performance. While humans, we should really focus more on creating new or better value for everyone. We don't have to do the monotonous, repetitive tasks anymore. We need to create. We should go back to being builders and creators. Now, next is something more affordable. They're called Tasty Equity. They're still Regulation A plus. What I like about this company is that for only $100, or I'm not sure if the conversion right now is 5,000 pesos or 5,200 or something like that. They they have they have experience in running restaurants and they have hundreds of restaurants now. And think about them like a real estate trust investment where you put your money in there and then they would really reinvest it back to a restaurant. But enough from me. You could watch their video.
This is Chris. And this is Pete. They're restaurant guys from a restaurant family. For more than 25 years in the business, they've developed franchises, run numerous locations, and even helped other budding restaurateurs open franchise locations of their own. Now they're inviting everyone to become a part of the restaurant business by investing in Tasty Equity. At Tasty Equity, we own part of 4 restaurants in the fast-growing Hothead Burritos and rapid-fire pizza chains. When you invest in Tasty Equity, you own a part of these 4 restaurants too, and many more we plan to open. It works like this. With most franchise restaurants, an entrepreneur pays for the right to open a location of a proven brand concept, then runs the place. Lots of us dream of owning a restaurant, but startup costs can be pretty steep. More than 80% of experienced restaurant operators who apply to open a rapid fire or hothead franchise don't have enough money saved. And that's where Tasty Equity comes in. We invest the rest of the money needed to get a new location open. Everyone has a chance to win. Franchisees realize their dreams of opening a restaurant. Tasty Equity and investors like you get a stake in all future earnings from that location. And the rest of us get more delicious pizza and burritos. We turned our first $100,000 investment in a rapid-fire pizza location into a second restaurant within a year. That same year, we added 2 Hothead Burritos locations. So you can see where this is going. For every $200,000 we raise, we plan to open another restaurant. The more we open, the more restaurants you own a part of. This is your chance to own a piece of a growing restaurant empire for about the price of a night out. Positioned right in the sweet spot of a fast casual category that's seen huge growth over the last 10 years and thrived in good times and in tougher times. We've got an experienced team in place to fuel rapid expansion. Between Chris's financial background and Pete's marketing pedigree, their partnership is a powerhouse of restaurant development. And with perks like lifetime discounts and participating hot-headed rapid-fire locations, private VIP parties, and more, if you've got a taste for the finer things in life, this could be the investment opportunity for you. I'm sorry, that was too much. Join us. Be a restaurateur. Invest in Tasty Equity today.
So, like the video showed you earlier, this now I want to talk back about the Jobs Act of 2012, why it really helped the economy of the US. As you can see, they have pizza business. They're growing faster, historically speaking, and data-driven speaking. They're growing faster than Shakey's or other restaurant that off or other pizza places. And what's unique about them is they're not just struggling like to open a new restaurant per se from day one, because there was not a lot of financial options for them back in the day like Shakey's did. With the Jobs Act of with the Jobs Act of 2012, now the public who loves the brand and interested can show their support, and they're now in regulation A plus, puts their money in there, and now they're on their way with the current trajectory and growth. They can now, most likely they are near already doing an IPO with their food business. With this kind of business model and structure, it allowed them to really grow as a business faster than any other pizza places or restaurants that we ever imagined of, because they are driven by technology, driven by good regulation, and at the same time driven by the support of the people. And this is not just limited, again, it's not limited for Americans. My talk about is how to be a global investor. So I'm encouraging, if there are companies that are worthy of investment, I have a list here with me. I can share them with you. And you could go directly to those companies and be able to invest. So this is not a financial advice. I'm not telling you when to buy or sell. This is not trading. This is educational as part of my advocacy, because not a lot of Filipinos really know their options, that they have options. They just don't know they do. And that's why I'm putting it out there. So if you'd like to contact me and learn more about our new product, the Sea Funders, it's an investment magazine. We're fixing it. We've planned to feature more companies in the US that are promising, that are regulated by the SEC with their A plus and CF regulations, and be able to provide more and smarter investment options for everyone. Perhaps a cool service that we provide nowadays is a virtual assistant service where we provide you a secretary that can do the investments in your behalf, but we're not soliciting any money from you. It's basically that the secretary will do the paperwork. If there are 7 pages of paperwork, then let the secretary do the fill up and everything, submission, coordinating with the company. And when the time is right that you have to pay, we just ping you. The secretary will call you, use your credit card or use your debit card to pay directly to the regulated company in the US. So we're providing that kind of virtual assistance just to speed up the things, because I know paperwork can be a drag. I've done a lot of paperwork in my life, and a virtual assistant will definitely give you more time, and at the same time, you know, just bring you in, give you more time for your passion, and at the same time, like, be able to just be called when you're needed. So yeah, that's pretty much for my talk. Thanks everyone.